What's up, family? Damarco Lampkin here from LampkinCorporation.com, a business consulting firm, and I'm here to talk to you about the chart of accounts for a nonprofit organization. So, a lot of my clients come to me and they want to know how to set up a chart of accounts for their nonprofit organization. So here are some key accounts that you might want to have when you're setting up your chart of accounts. I'm gonna go over them real fast. It's gonna be a real short video. So when it comes to the statement of position, which is like the balance sheet in the accounting world, you want to have a checking account, saving accounts, investment accounts, accounts receivable, inventory accounts, prepaid expense, property, equipment, accumulated depreciation, accumulated amortization. You want to have accounts payable, accrued salaries, accrued payroll taxes, accrued employee benefits, right? That's important. Accrued property taxes, deferred revenue, credit cards payable, and here's the kicker: unrestricted net assets, temporarily restricted net assets, and permanently restricted net assets. And you ask me, what are the difference, Mr. Damarco Lampkin? Here's the difference between the two. So unrestricted net assets are donations to a nonprofit that can be used for general expenses, and they can be used for any other legitimate purpose. Temporary restricted assets usually are earmarked and they are meant for a specific program or project that must be used within a specific time frame that the donor has specified, right? Permanently restricted means these are only for this specific reason and cannot be used for anything else. So when you get these donations and stuff from donors, and either they specify it, if they don't specify, it's unrestricted. You know, here's $100, you can use it for whatever. Or they say this is temporarily restricted for this. You have to use it at this time for this type of asset for this specific program, or it expires. Permanently, you have to use it for this specific purpose. If you don't, we can sue you. All right, so that's the statement of position, which is the balance sheet. Here's a statement of activities, right, which is the revenue statement, right? So some of the things you want to have on your chart of accounts, you want to have donations and grants from individuals, donation and grants for governments, donation and grants from foundations. You want to have special events like sponsored events. You want to have special events for auctions, special events for ticket sales if you have any special, or you want to have program revenue, sales of merchandise, membership dues, in-kind contribution. You want to have temporary restricted income, permanently restricted income, interest income, and dividend income. So the two kickers right there is the temporarily restricted income, right? So when you get income and it's coming from whatever source, you have to use it, and it's restricted to those purposes. Like it goes into some type of budget. Like if you have a program, this income came from this program and must be used for this program. Permanently restricted income, this income is permanently restricted for these programs. You can't move it around, you can't rebudget it or anything like that. It has to be used for those purposes. And here's another statement of activities, which is kind of the same as the revenue, but this is the expense side, and these are some of the accounts that you want to have. And I'm gonna make this real quick, and then we're gonna wrap this up. Salary and wages, you want to have that. Payroll taxes, health insurance, dental insurance, retirement benefits, worker compensation, HSA contribution, depreciation expense, amortization expense, cost of goods sold, fundraiser expense, special events expense, program expense, marketing and branding. You want to have advertising, contract services, accounting services, legal services, rent expense, utilities, telephone, maintenance and repairs, office supplies, printing and copying, postage and shipping, license and permits, bank fees, merchant service fees, board expenses, and insurance and miscellaneous expenses. So that's just a sample of how your chart of accounts should look like for a nonprofit organization. It doesn't mean you're going to use all of those accounts that I just went through, but it's just a good start. If you have a nonprofit organization, of getting your chart of accounts set up, you want to set up correctly. If you need help with something like that, I have a service that could help you with it. We provide that particular service, excuse me, and we could get that set up for you. You have to set it correctly, or your reports will not report right, and that's one of the key benefits of having it set up correctly. And then also, we also could train your staff on how to use these accounts the proper way. So at the end of the year, you have to submit your taxes and stuff like that. Nonprofits don't have to pay taxes, but they still have to submit their financial statements to the government. So when you do that, your reports come out right. So it's a little bit of a task, but it could get done. So remember, like, follow, subscribe, Damarco Lampkin, Lampkin and Associates. So we a CPA firm mixed with a financing and mixed with marketing as well. So we have those three legs of services. Reach out to me if you need help. All right, one.